What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to do some in-depth technical analysis and break down what's happening with Tesla right now, and also talk about the news, data, and technicals are telling us about the overall market and how that can also affect Tesla. I'm going to talk about the data that just came out today, what's coming out for tomorrow, and how all of this will tie in together and move the markets. But before I do anything like that, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 4 days. Check it out before they run out. With that out of the way, let's get on with the video. So what's likely going to happen to Tesla, in my opinion? Overall, the price action is looking a little bit more bullish and it's holding up quite nicely, but this will also depend on the data coming out for tomorrow. But first, I want to talk about why did Tesla and the overall market actually pump the way it did. And something changed in the options chain that's actually helping the markets pump even more. Firstly, the data came out that I was talking about yesterday, the jobs numbers and the PPI reports. This was actually all very bullish for the stock market. PPI was actually only 2.7%. Once again, this is just reported data. Obviously, these numbers are very manipulated, but so far it's a good sign for the Fed's policies and also a good sign for the markets. 2.7% is actually a lot lower than the 3.2% forecast for PPI. And then the core PPI was about 3.4%, which is lower than the 3.5% forecast. So once again, lower inflationary numbers than expected, which is good for the stock market. And then we had initial jobless claims that came out. We had 239,000 initial jobless claims compared to 234,000. Sorry about that, for the forecast. So overall, we saw a lot more jobless claims than expected. And then for the 4 week average, it was also higher than expected for jobless claims. What that means, once again, is the fact that there are more and more people losing jobs, more people are applying for jobless claims, and there's more unemployment coming to America. That is super, super important for the markets because the markets want pain. The markets want to see unemployment go up because that's going to be driving inflation down and bringing down aggregates demand and demand for different products and services in the economy. Now, it is very, very painful for everyday people. I understand the pain and the frustration during a time like this, but the stock market actually has a different perspective. And I want to actually talk from that lens. I don't ever mean that it's good people are losing jobs. I'm simply talking about this from the market's point of view. And that is why the market's pumping, because we got good jobs numbers. We also got a relatively low PPI. But it isn't just that. There's actually something else that's helping the market pump, and that's based off the options chain right here. Now, many people look at SPX and also like the NASDAQ in itself. You could look at those, but I also like to look at SPY and the options chain because we actually have some very, very good telling data right here. Now, looking at tomorrow, something crazy happened. We actually saw an additional 200,000 puts opened overnight on SPY. So people are just loading in on puts. They were just shorting and shorting and shorting. And it actually made a lot of sense considering what was going on in the charts. Now, what happened was the Fed came out yesterday during the FOMC minutes, and they were telling us that there's an increased probability of a recession. They were telling us that there's going to likely be a lot of pain, the landing's going to be bumpy, and the odds of a soft landing are very slim. And this did actually cause the market to sell off. On top of that, core CPI was higher than expected, not good for the Fed and the markets. And that's part of why people became very bearish. They became very scared. And we saw a lot of sell signals coming from a technical standpoint. But during this day and age, at least for this week, going into today and tomorrow, technicals are not everything because the market's reacting to very important pieces of data from the CPIs, to earnings coming out tomorrow, and that's going to dictate what happens. But right now, I just want to note, because so many people were just shorting and shorting and shorting, we had about a total of about 766,000 puts expiring just tomorrow, and we have under 400,000 calls expiring. That's a 2.06 put to call ratio. If everyone is shorting, if everyone's betting the market's about to crash, the market makers oftentimes cause the opposite to happen. They start pumping the markets very hard. They start causing as much pain as possible for shorts, and the odds are actually in favor of them doing that again tomorrow. That may be the main reason why we started pumping, and they're just using the data as an excuse, and it could actually continue. Now, for tomorrow, however, I'm not as confident as I typically am on days when it comes to predicting, because we have bank earnings coming out. We have JP Morgan Chase, we have Citi, Wells Fargo, PNC, BlackRock, and many other institutions and banks reporting earnings. This is extremely important, and this will affect how the market moves. However, the odds are actually more in favor of the market making a move to the upside, but not necessarily guaranteed. And let me explain. The market is expecting the banks to not do too well. The market is saying the banks should not give us good earnings because of the SVB situation, because the banks were struggling, and we wouldn't necessarily expect them to do too well. But what's interesting is, if the banks do very good, the stock market is going to pump, it's going to rally. That's the first possibility. And why is that? That's because Janet Yellen has been meeting up with lots of regulators, and she's been saying the banks are very stable. The banks are doing fine. There's nothing to worry about, as the Fed is continuing to inject more liquidity into the markets. They're also providing more leverage for the banks, and that's actually going to fuel the narrative that she is presenting. Not saying she's right or wrong, it just fuels that. And the stock market likes that. The market likes to pump off what Janet Yellen says. It likes to pump off the narrative that the banks are going to be fine. Once again, I'm not saying it's right or wrong, it's just based off how the market sees it. So if the bank earnings are good, the market will pump. If the bank earnings are okay, the market's going to pump. Why? Because most expectations are more negative for the banks. But if the bank earnings are bad, this is going to depend on how bad they are, and the market will react to that. What I mean is, if they're bad, but they're not as bad as the market is expecting, the market could still pump again. They'll still find a way to pump the markets. The market makers are very, very cunning, and that's what they like to do, to hurt people and cause pain for options holders. But if they're horrendous, if they're as bad as expected, if not worse, then the stock market could tank. We could see the market reverse and start selling off. So, in most of the possibilities, this actually favors upside, but there is a risk of downside if they are absolutely horrendous. And I don't really know, but I really believe that, based off what we're seeing, the odds are favoring that the market's going to end up pumping. The odds are just a little bit more likely to cause that. And then that basically tells me that maybe the bank earnings won't be as, horrendous. They're not going to be too horrible. Maybe they could be a little bad. Maybe they'll be okay, but it won't be way too horrendous. And that's what I'm basically thinking. Now, for Tesla, we're actually pumping on relatively low volume at 112 million. So we're not getting crazy high amounts of volume, but Tesla is actually green. I also want to note that we are getting very close to earnings for Tesla. We're just a couple of trading days away from it. It's going to be happening on April 19th. That's super, super important for Tesla. As we approach earnings, there's a good chance Tesla will start to pump and maybe improve its price action. And I think that the odds do favor that. Now, it could start as soon as tomorrow. And if that is the case, that would be very awesome. But I don't know for sure. It will depend on the banks. I also want to note that the short volume did go up just a little bit. We did see a little bit more shorting for Tesla. And looking at the data, the price pairs ratio has been just decreasing a bit. What this means is now Tesla does not have as much strength as it did earlier when Tesla was pumping harder, but this could reverse as we approach earnings. I'm just going to be watching it, because this is almost like a support zone where my cursor is right here. And when this bounces, this tends to be the areas and the levels where Tesla ends up outperforming the market. There's a good chance that can happen very, very soon. If it starts tomorrow, then Tesla could make a nice move to the upside, just hypothetically. But looking at earnings, Tesla tends to do very well during these big reports. If Tesla kills it during earnings again, there's a good chance it could continue to soar. But I'm still very cautious because of all these price cuts and how it's affecting Tesla's overall performances. Looking at analysts, many of them are still very bullish. The majority of them are very bullish. Tesla tends to be green only about 48% of the times on Fridays. They also tend to be red on Thursdays, like 53% of the time. And we actually were green today. So this doesn't guarantee anything. This is just historical data. Aprils tend to be green 58% of the time for Tesla, so we tend to be performing very well during this month. And during the fourth hour of the day, Tesla tends to perform a lot better than the markets, and that's one of its best hours. Now, for the short interest, it's actually relatively slowing down compared to like these moments right here back in like January to February. Also, parts of like March, it is slowing down a little bit. The latest we have was just 2 days ago, about 18 million Tesla shares were shorted. Nothing too horrible overall. But I do have some negative news for you guys involving Tesla, and that is based off these inventory levels. Now, this is going to be affecting us more for Q2 earnings because when you look at inventory levels, first off, I just want to remind you that right here, this is where Tesla cut prices. Like right here, when prices dropped, inventory levels started to drop because so many people started buying Teslas. However, recently, right, a lot of inventory levels started going up and up again as demand is slowing in the economy. So right here, this is where Tesla announced more price cuts, right? The 2 to 6% price cuts over the weekend that they just announced. And Tesla's inventory level started dropping by almost 100, but then all of a sudden they're starting to go up again. So this is telling me that that's not the best of signs. There's so much uptick pressure on the inventory backlog that's now continuing to increase, and that tells me that we may not get the strongest deliveries report for Q2 as of right now. I'm going to be very cautious approaching Q2 for Tesla. Earnings may not be as great if they keep on cutting prices because of this. But then again, that does not change the fact that Tesla is still an absolutely incredible company for the longer term. I'm still very bullish based off some of the news that also came out and based off the longer term. Tesla is now actually distributing a lot more of the semis to lots of companies. And that's once again very awesome because as they have more products, as they get more exposure, the company will end up succeeding more and more with more deliveries, better numbers, more just better in almost every way. Margins will be one of the biggest things that concerns me, but I do believe Tesla will overcome it over time. Now, for the news that came out, James Stephenson, I apologize if I said that wrong, he basically tweeted that right here, we actually are seeing Tesla overtaking, right, the next nine competitors combined this year so far in terms of their overall sales. So Tesla is selling more cars than the top nine EVs out there in the world overall, just for the USA. Tesla is very popular. They're just killing it. They have a very big amount of business right over here in the US, and that still makes me very bullish going into the longer term. Elon Musk even commented on this saying it's very awesome. He's even thanking the people for presenting this. Once again, awesome news going for the longer term. Also, Tesla tweeted that minimal maintenance equals less money versus comparable internal combustion engine vehicles. And you can see Tesla actually tends to have less recommended maintenance compared to other cars when it comes to like replacing spark plugs, transmission fluid, and the coolant and all these other things. And overall, that just makes Teslas very awesome cars to have. Less maintenance makes them less annoying for different customers, and a lot of customers really love the features in these cars. The cars are basically just giant computers driving around, and soon they will be able to drive on their own in a much more efficient manner than before, and they're continuing to grow and improve on a daily basis, and that makes me very excited for the future of this company. But for the short term, what is going to happen to Tesla? Is Tesla going to keep pumping? Is Tesla going to tank? I'm going to break this down, but I first want to talk about the markets, the overall market first. So for SPY, things are looking a lot better. This thing was up 1.33%. I did mention that we have this bearish divergence. It is still valid, but there's no indication that it's going to lead to like a reversal just yet. There's no indication yet. I told you guys yesterday that, we could go either direction depending on the data that comes out, but I was actually a little bit more bearish, and that's because of what just happened from the Fed announcing a recession is likely, and there was just a lot of overwhelming bearish news. But what happened was sometimes unexpected things could happen. Sometimes technicals were just not always going to be as accurate, and sometimes unexpected things happen, right? And it's okay. But now that the market's pumping like this, now that we actually broke the highs we made previously in the 412s, this tells me the market makers are very motivated to try to pump the markets even more. They're trying very hard to squeeze shorts. They're trying very hard to cause a short squeeze, and the odds are now favoring that. Now, in order for this to happen, it will depend on the data, of course. That the earnings that are coming out. But like I said, the odds are still in favor of the market makers continuing to push us up. It's not guaranteed, but it is more likely. Now, if we're bearish, let's just say the earnings come out, they're absolutely horrendous and it doesn't work out. SPY is going to end up coming down and retesting this 411 zone. If that fails, there's this gap support around 409. Now, that's going to likely be tested in the bearish case. If we're bullish, we're going to break above 414, which is we have some resistance there. If we break that, then 416 to 418 could actually come pretty quickly. Now, what do I think is going to happen? I want everyone to be prepared for anything. It does depend on the bank earnings, but I believe the odds are favoring. They're going to try to cause a short squeeze and actually squeeze shorts and annihilate them. Also, we're getting some more bullish developments because the dollar is getting weaker and weaker and weaker. This was actually a little bit surprising because yesterday it looked like the dollar wanted to break out and it ended up actually failing pretty horribly. It actually broke below this 101.5 support. Now it's currently around the 100.8 zone, just at 101 right now. And there's no clear sign of the dollar bouncing. If the dollar continues to downtrend, which it most likely will, this is once again going to be bullish for the stock market. And so far, that is what the charts are telling us. For NEO, just real quick, we do have a head and shoulders developing right now. This actually could lead to downside in the future if it breaks below 9. But for the time being, if the market does get a squeeze, this could actually hold up above 9 and maybe just trade sideways. It's not looking too strong. It's just getting tighter. And this is still very valid, right? This head and shoulders. It could end up actually playing out. Let me just make this bigger, guys. I'm sorry if my chart was looking too small earlier. For Microsoft, this is looking pretty nice as well. It continued to pump and pump. It actually filled this first gap right here. There's another gap up here if it breaks up. And so far, it actually broke above gap support and closed there. That's a bullish development. It's likely going to try to get all the way up to 292 from a technical standpoint. And if we break that, then 295 becomes possible and validating this possible head and shoulders that was developing. Now, once again, I'm prepared for anything. If we're bearish, then Microsoft is going to retest the 50 EMA on the hourly around 285. If we're bullish, this thing is going to break above 290 and maybe try to retest 292. And if it does that, it could break even higher. What do I think is going to happen? We're more likely to see the bullish outcome, in my opinion. Why? Because first off, we're getting closer to filling the gap. We have a bullish trend right here. Momentum is very bullish, especially after this strong open. And also, because of the fact that the market makers, once again, are likely going to try to manipulate the markets and pump us even more. For the QQQ, on the hourly time frame, I just want to note that this is also looking quite nice. If we're bullish, we're going to be watching 321 around that area. And if it breaks that, then 322.5 could come followed by 324.5, right? All of those are very possible thanks to the more bullish momentum. If we're bearish, it's going to retest the 50 EMA around this 316 area. And if it breaks that, there's support around 314, followed by the gap fill down to 312. What do I think is going to happen? Well, remember to be prepared for anything because I don't truly know what the bank earnings will bring. But I believe the odds are favoring from the market makers, also because of the chart right now, it's favoring that this thing is going to retest 321 very, very soon. And I don't know if we're going to break it, but we should at least retest it at the very least. For the VIX, it's just looking weaker and weaker again. It actually broke below 18. The next key supports around 17.8. If this thing breaks below it, then it could get very close to the low 17s. Could that actually happen? The odds are favoring that thanks to the fact that the market is pumping. But SPY did close just below its resistance around 414. So what that tells me is that the VIX is at basically support and the market is very close to resistance. It's going to make a big move in either direction. If the VIX bounces, then it could try to fill this gap, and that would happen because of the market dropping on bank earnings. Not a guarantee, but so far, the odds are favoring more downside for the VIX and more upside for the market because the VIX is continuing to downtrend and there's no clear sign of a bounce. On the daily, just look at the daily, it's just getting lower and lower and lower. It's just failing and failing. It looks to me like it might retest 17.5 to maybe 17 flat, and then it could bounce off that. But once again, I'm prepared for anything depending on how earnings go. But I just want to note that the odds do favor more upside for this market. Amazon's at 102 above resistance. If we're bullish on Amazon, I'm going to be watching 104 then 105. And then possibly, 107 is a stretch, but I think 104 to 105 has some resistance. We could retest that if we're bullish. If we're bearish, there is 98 all the way down to 198. And if that fails, then there's 96.21. What do I think Amazon's going to do? The odds are favoring, based off this very bullish looking daily candle, it's going to pump all the way up to 104, maybe even higher, maybe trying to get all the way up to about 105. It could also invalidate the possible head and shoulders that was developing, like right here. The left shoulder is here, the head, and then maybe a right shoulder could have formed. It could invalidate that if it actually breaks 104. That would be quite bullish temporarily. Now for NVIDIA, this was actually, it's still not doing too well, but it could actually try to bounce because it's actually very close to support at 264. Now on the hourly time frame, you could quite clearly see there's a head and shoulders developing on it, and it is actually showing some signs of relative weakness right now. But I don't know for sure if we're going to get some kind of bounce first before we do see downside. I don't know for sure. This will depend heavily on what happens tomorrow. If we're bullish, there is a chance this thing could try to get all the way back up to about 270, maybe even a little higher. It could surprise a lot of people because a lot of people are expecting this thing to just fall on its face and just start dropping really hard. If we're bearish, a break below 264 would lead to a test of about 260 to about 258, the 258 area. I'm thinking that it could go either way depending on the bank earnings, and also it has some relative weakness, but it might actually try to bounce tomorrow. I think it might try to bounce to get back to about 268 to 270, if not a little higher. And they might try to surprise a lot of people and squeeze more and more shorts. The odds are favoring that. But even if it does bounce, like it comes like right here, it doesn't guarantee that this whole like head and shoulders is invalidated. It could still be very valid. It could just be a delayed drop that's going to come for it. Just something I wanted to note. Apple's looking pretty nice, very strong looking price action for the day. In my opinion, I do believe on the daily chart there's an unfilled gap. It could actually pump a little more because of it. What I'm thinking for Apple is the daily candle looks bullish. If we're bearish on Apple, it has to actually retest 163.5, then 160. If that fails, then there's the gap fill down to 157. If we're bullish, Apple's going to actually pump to 166, break above that, then there's 168. What do I think is going to happen? As I mentioned earlier, I think the odds are favoring Apple's going to finish filling this gap. If it hasn't, I think it actually filled the gap, and it might try to retest 166. Now, if it breaks this, it's very possible it breaks this and it tries to go all the way up to 168. If that happens, that's going to help SPY and QQQ and the NASDAQ and S&P 500 actually pump more. AMD has some relative weakness to it, retesting 92. In my opinion, it might still try to bounce depending on how tomorrow goes because it's holding 92 so far. If it bounces, it could try to get closer to about 95. But overall, it is still looking a little bit weaker. Now, I don't really know if it's going to bounce off here or drop a little bit and then try to bounce. But overall, in my opinion, it's just going to react heavily to the banks and what happens from there. Google could try to get to about 110. If it actually gets to 110, that would be the more bullish case. The bearish case is a retest of 103 and then maybe 106 first, then 103. It's more likely going to try to get to 110 or higher, depending on how tomorrow goes. But I'm always prepared for anything. Meta, if we're bearish, it's going to come all the way down to 217, then 214. If we're bullish, this is 222.5, then 225 could come. If we're more bullish, the odds are now favoring a little bit more upside based off this candle. The 10-year treasury yield is also in the middle. If this thing drops, there's a gap fill that would be bearish. If it keeps going, if it drops, that's going to be bullish for the stock market. If it pushes up, that's going to be bearish. We're still in the middle, just not really doing too much, so it needs a little more time. Finally, for Tesla, before I ended this video, I know that this is taking some time. For Tesla, I just want to note that on the hourly time frame, it's actually up 2.97%. It actually got a nice bounce off of 180. I told you this is very critical for the stock. If we're bearish on Tesla, this thing is going to come down to fill this gap all the way down to about the lower like 180s. If we're bullish on Tesla, it's going to break above 188, which is where the 1 hour 200 EMA is. And if it breaks that, then 190 could come, 192, and then 195. Those are the major resistance zones to watch for. What do I think Tesla's going to do, right? I want to remind you to be prepared for anything because it depends on the earnings. However, the odds are favoring, in my opinion, that Tesla's going to actually pump up with the markets. We're getting very close to earnings, and I think Tesla's going to actually try to make its way closer to 190. It might break above this and try to fill this gap. There's an unfilled gap somewhere around like 192, a very tiny one. up here. And if it actually does that, I mean, it could even get closer to 195. Not too sure about that, but it is a possibility. 195 is actually very possible for Tesla. It could make a very big move. It's been trying to make these moves, and we do have a possible inverse head and shoulders that's forming. That could actually bring Tesla well above 190, and I do believe the odds favor that happening, maybe even 195 by close. That is a very, very big possibility. Regardless of how high it goes, I think it's likely going to have a green close. That is just my opinion. I believe it's very likely from a technical standpoint and because of what the options chain is telling us and based off the derivatives market. But once again, I'm prepared for anything just to be safe because of bank earnings. I'm just leaning more in the bullish direction. All right, so anyways, thank you all so much for listening. Please have an absolutely incredible rest of the day. And the last thing is, if you guys want any merch, I actually have a lot of links available either above or below the comments section, depending on where you're watching this from. This merch will definitely help me. And if you want to show your pride in the stock market or buying Tesla, you could buy a shirt that says "To the Moon," or we have options, or "Eat, Sleep, Trade, Repeat." I also have hoodies and a bunch of other things. The code SAVE5 will help you save 5% off your order. Thank you all so much, guys. Tesla to the moon, because the long term is still very, very bright. And peace out.